Welcome back to today's market analysis for September 19th, 2025. Buckle up, traders, because we're in for a wild ride. The markets are buzzing with activity, and we've got some jaw-dropping candlestick patterns that you won't want to miss. From bullish engulfing signals in tech to hanging man formations in utilities, today's charts are a technical analyst's dream. So grab your coffee, and let's dive into the candlestick chaos that's shaping our markets right now. Our first stop is the technology sector, which has been absolutely on fire this week. With an impressive gain of 9.2% and a staggering market capitalization change of $72 billion, tech stocks are leading the charge in this bull run. The software and IT services sub-industries were the primary drivers, each posting increases of around 10%. Hardware and storage weren't far behind, with a weekly return of approximately 8.5%. What's particularly exciting is the formation of a strong bullish continuation candlestick pattern in the technology sector. This positive signal suggests that the current uptrend is likely to persist, with buyers firmly in control and pushing prices higher. In fact, we've seen a whopping 112 bullish patterns emerge in tech stocks today. With the bullish engulfing pattern being the most frequent, this momentum has been building for some time, and there's a real possibility that we'll see new highs in the near future, especially in mid-cap and small-cap tech stocks. Moving to the communications sector, we're seeing similar bullish sentiment. The sector formed 97 bullish patterns today, with hammer and engulfing formations dominating the charts. These patterns are particularly prevalent in the daily timeframes, indicating strong end-of-day buying pressure. Interestingly, while most of the sector appears undervalued, mega-cap stocks like Alphabet are showing the most promising setups for potential breakouts. Let's shift gears to the energy sector, where the picture is a bit more mixed. We observed 32 bullish patterns, but these were overshadowed by 186 bearish formations. The hanging man and bearish Harami patterns were particularly prominent, especially in the daily and 30-minute charts. This suggests that, while there may be some selected value plays in energy stocks, overall sentiment is cautious, with a higher risk of near-term corrections. The utilities sector is painting an even more bearish picture. We counted 210 bearish patterns today, with hanging man and Harami formations leading the pack. These signals, predominantly appearing on daily charts, indicate that utility stocks may be overvalued at current levels. Traders should exercise caution in this space, as the risk of a pullback seems elevated. In the healthcare sector, we're seeing a more balanced scenario. With 44 bullish and 22 bearish patterns, the most frequent formations were Doji and Belt Hold candlesticks. These patterns often signal a period of consolidation or indecision in the market. However, it's worth noting that many healthcare stocks, particularly in the medical devices and technology subsectors, appear undervalued. This could present opportunities for patient investors looking for value plays. One of the most exciting areas of the market today is the small-cap space. We observed 71 bullish patterns in small-cap stocks, with Marubozu and Morningstar formations being particularly prevalent. These powerful, bullish signals, combined with increased retail participation and insider buying, suggest that small caps could be poised for significant upside moves in the coming weeks. Let's take a closer look at the intraday action across the broader market. On the 15-minute charts, we saw a flurry of activity in the technology sector. Between 10:30 a.m. and 11:45 a.m. Eastern Time, a series of bullish engulfing patterns formed in several large-cap tech names, triggering a wave of buying that persisted throughout the afternoon. The Nasdaq hit its intraday high of 18,502 at 3:45 p.m., just before some mild profit-taking set in during the final minutes of trading. The energy sector, on the other hand, experienced its most volatile period between 1 p.m. and 2:30 p.m. During this time, we observed multiple hanging man formations on the 30-minute charts of major oil and gas companies. This led to a sector-wide sell-off, the Energy Select Sector SPDR Fund XLE dropping 2.1% to close at 92.34. In the world of cryptocurrencies, Bitcoin formed a textbook hammer pattern on its daily chart, bouncing off support at $52,000 to close at $56,780, up 4.2% for the day. This bullish reversal signal, coupled with increased volume, suggests that the recent pullback in crypto markets may be coming to an end. Now, let's dive into some specific sector highlights and their candlestick frequencies. In the technology sector, we observed 112 bullish patterns and 41 bearish patterns, with the bullish engulfing being the most frequent. These signals were most prominent on 15-minute and daily charts, indicating both short-term momentum and longer-term bullish sentiment. The communications sector showed 97 bullish patterns versus 35 bearish, with hammer and engulfing formations leading the way. These patterns were primarily observed on daily charts, suggesting that investors are taking a more measured, longer-term view of communications stocks. Energy stocks displayed a more bearish bias, with 186 bearish patterns compared to just 32 bullish. The hanging man and Harami patterns dominated, particularly on daily and 30-minute time frames. This suggests that traders are becoming increasingly cautious about energy stocks, especially in the large-cap space. The utility sector showed an even stronger bearish tilt, with 210 bearish patterns versus only 24 bullish. The hanging man formation was the most frequent, appearing primarily on daily charts. This overwhelming bearish sentiment indicates that utility stocks may be due for a significant correction in the near future. In the healthcare sector, we saw a more balanced picture with 44 bullish and 22 bearish patterns. Doji and Belt Hold candlesticks were the most common, typically appearing on daily charts. This suggests that healthcare stocks are in a period of consolidation, with potential opportunities emerging in undervalued medical technology companies. Small-cap stocks stood out with 71 bullish patterns and only 19 bearish. Marubozu and Morningstar formations were particularly prevalent, appearing on both intraday and daily timeframes. The strong bullish sentiment in small caps is further supported by increased retail investor participation and positive insider buying trends. As we look ahead, the market sentiment remains largely positive, with momentum firmly in favor of bullish sectors like technology, communications, and small caps. However, traders should exercise caution in the energy and utilities sectors, where bearish signals and potential overvaluation present increased risks. We're likely to see continued volatility in the coming days, especially as the market digests upcoming Federal Reserve announcements. However, the strong retail flows and positive momentum in undervalued sectors suggest that there are still plenty of opportunities for both swing and momentum traders. In conclusion, September 19, 2025 has presented us with a complex and fascinating candlestick landscape. The technology and communications sectors, along with small-cap stocks, are showing the strongest bullish signals. With numerous hammer and engulfing patterns pointing to potential upside, healthcare stocks are offering stability and potential value plays, particularly in the medical devices and technology subsectors. On the flip side, energy and utilities are facing elevated risks of bearish reversals and potential overvaluation. The most frequent candlestick pattern we've seen today is the hanging man, particularly in utilities and energy stocks, while the sector with the highest bullish count is technology, especially in the mid-cap and small-cap space. Today's market climate favors strategic sector rotation and targeted entries. Traders should focus on undervalued subsectors and be prepared to act on the actionable setups we've identified in both intraday and daily timeframes. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.